Up now, Forum Daily's cryptocurrency and digital asset update with Catherine Murray. She's the host of The Buck Stops Here, and she joins us now. Take it away, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly crypto and digital asset update. I am Catherine Murray. Let's take a look at the quick stats here. Cryptocurrencies have been trading mostly higher today, with Ether actually leading the way, up by about 5%. Bitcoin approaching that $45,000 level, actually hitting a 3-week high and breaking out of its recent trading range. Importantly, as well, just to put things in perspective, as we always want to do, Bitcoin actually hit its highest level back in October of 2021 at 69,000. I do want to, however, point out that volumes are actually well below the high. So that's important to point out as well. Cardano, that's actually the biggest outperformer right now, up by about 14%. That's after Coinbase added the asset to its staking service. Bottom line, we have seen some strength and stability in cryptocurrencies over the past 2 weeks. Away from that, right now, we're seeing cryptocurrencies valued at $1.8 trillion. Bitcoin, of course, the largest market cap share of that, 42%, and Ether at about 18%. Now, with higher oil and gas prices being felt around the world, and of course, Europe's reliance on Russian oil and gas, making Russian sanctions much more complicated, I thought I'd start with energy companies related to crypto. If you recall, back in January, we did discuss ConocoPhillips piloting a project that involves selling flare gas to Bitcoin miners in the Bakken. To put some context around all of this and what it exactly means, during extraction, oil and nat gas extraction, a certain amount of gas is released into the air, known as gas flaring. ExxonMobil actually piloted the project first back in January of 2021 and apparently is expanding beyond the Bakken. So basically, this allows Bitcoin companies to use flared methane from nat gas operations to mine Bitcoin. And recall, of course, one of the big pushbacks from the environmental perspective is the amount of energy it takes to mine Bitcoins. So interesting to note that. Last week, we also discussed the UK government reminding Bitcoin companies that they must comply with the Russian sanctions. Well, interestingly, Russia's Congressional Energy Committee said that they would accept Bitcoin for natural resource exports. The Washington Post has a story with the title, "Will Russians Use Crypto to Bust Sanctions?" They point out that Russia's exports were about $500 billion last year, and that illicit crypto activity is only $14 billion, meaning that it would be difficult to do. The volume just wouldn't be able to capture that $500 billion mark. Not that it would be the full 500, but that there is, in fact, room for smaller scale evasion. Well, we've mentioned this a couple of weeks ago that the Russia-Ukraine war is the first crypto war. Well, adding to that, Blackrock's CEO, Larry Fink, in a letter to shareholders says that the Russia-Ukraine crisis could accelerate digital currencies. He said that a global digital payment system could enhance the settlement of international transactions while reducing the risk of money laundering and corruption. Now, do note, though, that about a year ago, Larry Fink, and his company is the largest asset manager in the world, said that it was too early to determine if cryptocurrencies were speculative or a speculative trading tool. Now, more firms are getting involved in the crypto space. Goldman Sachs, for one, is going to be offering the over-the-counter crypto options trading. And another investment bank, Cowen & Co., is offering crypto as well. So few more investment banks getting in on the move here. On the regulatory front, Australia is planning to regulate cryptocurrencies with a focus on crypto taxation, investor protection, and regulation of digital banks and exchanges. Also, if you recall, El Salvador has really been leading the charge here in cryptocurrencies. And Binance, one of the companies within this space, is going to be meeting with the government to discuss the country's adoption of BTC as a legal tender. Meanwhile, California-based crypto lending firm Figure Technologies, listen to this, announced that they are going to be offering crypto-backed mortgage lending products next month. And here's the really interesting aspect. The lender intends to offer up 100% loan-to-value mortgages on BTC and Ether used as collateral, Bitcoin and Ether used as collateral. Wow. I'll leave you with this. If you're an optimist or a crypto optimist or not, there's an interesting article on New York Times that might help you figure that out. Obviously, this lending firm is a major crypto optimist because they're going to do 100% loan to value. They've got to believe that that's going a lot higher from here. Nima, I'll leave it there. Back to you.
Always a lot to unpack, Catherine. Thanks for that. That was Catherine Murray, host of the Buck Stops Here.